Hey, welcome back everyone. It is time for another red hot covered call video. Hey, look, today we're going to talk about a Chevron trade I made yesterday using their earnings, using that positive volatility to pick up some crumbs on a one-day covered call. I don't want to call it day trading covered calls, but look, it was a one-day covered call, pocketing those crumbs, and I'm going to show you how I did it. Now look, for all you retirees out there, and for those that use the conservative 30-day covered call, you can still learn from this video. The reason is I'm going to break it down. I'm going to show you how I look at a chart. The fundamentals are the same, and I think you're going to enjoy it. For a lot of you folks that want to play the volatility of the market, this is a great opportunity for you to really see how a cat like me does it. Look, I don't profess to be a guru, and I don't profess to be a rock star of options trading. What I'm here to tell you is that I have tons of experience, been doing this for 2.5 years, and I'll tell you what, it feels good when it flows like water. And that's what I hope you're getting from my videos. And I'll tell you what, I absolutely love the support you're giving me. One of the things I always do is look at my video channel. I want to see how many videos you cats are watching. And I'll tell you what, it jacks me up. Because it wasn't but about 6 months ago that I'd put out a video and I'd get about 300 people per week watching. Now that's pretty good when you have 2,000 subscribers, right? Well now, as we keep this going, every single week, I'm knocking down hundreds of viewers. And I'll tell you, it just motivates me to get behind the mic and do this because I know I'm helping somebody. It gets frustrating when I go to YouTube trying to up my game, watch that new uploaded videos about timely and relevant information in the selling premium world, and they're just not there. I'll tell you what, that's what motivates me to keep doing it because I know you are out there looking for that timely, relevant, new covered call video to up your game, and it's not there. That's why I'm here. I show you my trades, we talk about them, and maybe you learn something. Maybe you get comfortable. You get comfortable enough to go out, open up that small ball account, do your first safe trade. That's what I hope this channel does for somebody out there. But hey, look, I know there's a lot of you out there that are experienced and you're watching my trades and you're learning from them. So that gets me even more excited because I know what we're doing here. Both the salty dog covered call writer and the newbie covered call writer wannabe can learn from me. That's what it's all about. I am paying this forward from my mentor, Jerry, who helped me go from a frustrating life of trying to swing trade, day trade, to now, over the past 2.5 years, having this steady strategy that is successful. And I'm going to show you where I'm at this year because we only have 2 months left, and I'm going to show you how close we are to hitting my goals. Before we get going, if you like what you're hearing at the channel, I want you to subscribe to the channel. It's right there, and it's free. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. Now what we're doing is this. We're staying active in the market even though October was a nasty sell-off. I've done multiple videos on how I'm playing this volatility. Now, they're not all winners, they're not all losers, but we're staying active in the strategy, we're staying confident, we're staying in the game. And that's what's important because it is really easy to find ourselves in a bad spot emotionally. And I talk about that all the time. A lot of times we're buying these stocks as the market's going higher. And when that floor comes out, for whatever reason, the market falls off, we find ourselves buying stocks higher, trying to write those covered calls, trying to pocket those crumbs we talk about. But now we find ourselves in a bad spot. The market has fallen and we're down hard and we don't know what to do. So we have to stay in the game. We have to watch the videos. But more importantly, we have to stay focused and understand they run them up to sell them off. And that's exactly what I told you in the last couple videos that I've done. Now look, 2018 for me was a $50,000 goal. $50,000 goal. And look how close we are. Right now, I have $2,200 on the books. And I'm going to show you what trades I'm still in. They close out 100% profitable. I am going to exceed the 50,000 mark before we get into December. Knowing that I can knock down 21.5% cash on cash, I'm telling you what, if I can do that every single year using this steady strategy, it really makes me feel good. I'm learning a skill. That's what I hope to inspire you by showing you my current numbers. The market's up about 1.45%. And I'm up cash on cash without much heavy lifting this year and with some dogs in my account, 21.5%. Now I want to show you where I'm currently at. If you watched my last video, you know that I'm playing the cash secured put in this very volatile stock market. and I still have those trades on the books. The Win, Adobe, and Alibaba trades are still on the books. I haven't bought them back, even though I could have bought Alibaba for half price. But I'm going to keep those on the books, and I feel comfortable that as we get into November, we might get that little November rally as Wall Street starts to buy up all of these oversold stocks for that potential Christmas rally. Now, I don't know if a Christmas rally is going to happen, but I'll tell you, if history repeats itself, we're going to get some sort of movement off this bottom. With that said, hey, I have no crystal ball. I make no predictions, but I'm going to keep playing the strategy. Before I move on to Chevron, look at this. I have written so many covered calls on Microsoft, I actually have to add a new row for the most recent covered call I did on my Microsoft shares. This is what I do. I buy a stock, we write multiple covered calls, we might even buy some more stock, write even more covered calls, and we try to do it. We try to do it multiple times, knocking down all those crumbs I talk about. And this is at guaranteed monthly income. This is where that skill part comes in. We do it enough times, we get that experience, it begins to flow like water. And this is why I call it my cash printing machine. We can learn this as a skill. We can do this every week, every month, generating that extra income we need. Whether it's for retirement or living a good life, knowing that we can generate extra income off the stocks we own, it absolutely jacks me up. And quite frankly, I got to say thank you to my man Jerry every time I see this cost basis tracker on Microsoft. Now, here's our 1-year chart on Chevron. Now, I've been playing Chevron for years, and I feel comfortable owning Chevron and playing Chevron for covered calls and cash secured puts in a range. See, every time Chevron rallies, they seem to sell it off. And notice every single time they rally it, sell it off, it's very predictable. But it doesn't shoot to the moon or fall off the table. So for me, it's a very comfortable trade. Love using Chevron, and I love playing Chevron for those nice, juicy $1.12 dividends. So I'm able to buy the stock prior to X date, collect the dividend while I write that covered call. I'm able to double dip those profits for that 30-day period. Now, Chevron has been rallying with all of the oil stocks as oil is back above 70. And I'll tell you, it has been a long journey to get here and a lot of ups and downs. I mean, look at this. Chevron was playing at 135 and it fell as low as 110. I mean, that's tech stock type stuff, not a very mature big oil company. Notice what has happened recently. Chevron has rallied hard, and recently, with the rest of the stock market tailing off, it has fallen off, giving anybody interested in Chevron a chance to buy, thinking that we get a little bit of support right here. See that line? Well, that's what I did. In fact, I've done it multiple times this year, but most recently, this is what I've done. I bought Chevron down here at 117, and what I did was I wrote the 30-day cover call, picking up about $1 and the dividend, the ex-dividend date, right around expiration. So I extended that by 1 week. So most likely I would get the dividend as well, adding another $1 to my profit. So in this case, I was going to make in a short 30-day window about 6% on Chevron. Well, what happens? Market falls. That $1 premium I got paid for that covered call, it ends up falling. I end up picking that up for 1 dime. Remember, Fidelity doesn't charge me any fees for any options that are a dime or below. So the option I got paid $1 for is now trading at a dime because the likelihood of Chevron getting to 123, for which my option was, is not going to happen. So I took that obligation off the board and I'm just sitting there. I'm sitting there waiting for another opportunity. And sure enough, look what we get. Chevron announces earnings that absolutely blow away the street. The numbers were so good, we wake up with the stock brewing 4 and 5 points. So this is where I'm sitting in front of my computer. I could see the pre-market working, and I'm going to try to use this volatility to my advantage. I'm going to try to write a covered call at the height of the buying in the morning. Let's go to that chart and I'll show you exactly where I did that. This is a 1-day covered call. This is Friday morning. Chevron has just announced earnings and they are off the charts good. The stock is brewing in pre-market. It's up about $3 and $4. This is a huge company. So for it to be up $4 and $5, there is a ton of pre-market buying. So what's going to happen is this. All those orders are coming in to buy. The market maker has to jack that price up. So there is huge volatility. So as you can see right here, So as you can see right here, look at all that pre-market buying. Look at the stock coming out of the chutes, rocketing higher. This is that very short window where I want to use this market volatility. I want to use all that momentum from all those buyers. The market maker is filling all of these buy orders, causing the stock to go higher. So when the stock's trading at 114x, which is already $3 and $4 above where it closed the night before, what I figured was this. It was already up. It was already up plus 3%. Now, from my experience, most huge Dow type companies will rally out of the gate, but they won't continue that rally the rest of the day. Unlike some tech stocks that have low floats, typically what happens with tech stocks that have great earnings, they might actually rally higher as we get into the end of the day. But stocks like Chevron, I think that selling's going to peel off. Yes, it's going to stay higher, about $3 or $4, but it is not going to continue higher, higher, and higher throughout the day. There's just too many shares outstanding for a stock like Chevron. So I believe after about the first 30 minutes, this is going to settle down. Chevron's going to find a nice sweet spot, and it's going to trade there the rest of the day. And sure enough, look what happened. As the stock comes out of the gate, it rockets above 117. Well, right here, when volatility was rolling, I used that opportunity to write a one-day covered call at 115. I ended up pocketing 70 cents, but it's less than 1 day, right? It's going to expire tonight. All I have to do is pick a strike price for which I believe Chevron is not going to finish above. And I felt 115 was a good number. And sure enough, as the rest of the day played out, look what happened. That momentum, all those buyers start to tail off, and they tail off quick. You could see down here with our volume. And sure enough, it starts to come down right around that 115 mark, and I'm feeling pretty good. Because as the day gets long, what I might do, I might come in. An option has time value and real money. Say the stock's trading at 115.05. Well, it's only 5 cents above 115. So my option for which I got paid 70 cents, the time value of that option, because the day is getting short, that time value portion is going to shrink. It's going to shrink. And we're going to have more real money than time value. So that 70-cent premium I got is going to start to dwindle because that time decay is rapidly happening on this final day of expiration. The likelihood of it finishing above 115, that time decay is coming out of it. So as it's trading at 115, and then it dips below 115. Well, now that option is now trading well under 70 cents. And the likelihood of it finishing at 115 with the volume almost drying up is unlikely. So now this option is probably trading for under 10 cents. This is where I love to come in. What I'll do is I'll buy back that option for say 3 cents or 5 cents and take it off the board, pocketing the difference. A 1 day quick hit covered call right. I keep the shares. I keep the difference between the premium I got paid and the buyback. And sure enough, when the option got down to 3 cents, I'm thinking this is a great opportunity to buy it back. I did not buy this back. I let this go to expiration because when it's trading down at 113 and we're getting close to the end of the day, there's no way it's going to finish at 115, right? Well, look at this. Just like anything, the market is unpredictable. It actually rallies. I did not see this happen. It ends up going above 115, and I almost have my shares taken away because remember, if it finishes even 1 penny above 115, the market maker will take my shares. Even though the person that bought my option for 70 cents is not profitable, the market maker will be. Market maker has no cost. They will take my shares at 115 and sell them for 115 and 1 penny, making the difference. Now look, Chevron ended up finishing below 115, so I do keep my shares, and I'm going to look to write a 30-day covered call. This for me is cherry picking a covered call using market volatility. But see, I don't get here unless I have my experience and I know the Chevron trade, right? I know and I feel comfortable with Chevron. Now, I know what you're thinking. How are you going to find your next great stock for writing covered calls? Well, look, I want you to start with the CTP dashboard. It's free. I offer it up to you for free every single week, loading it with the best stocks trading on the stock market right now. And I offer it up to you for free. There's no hooks, and I definitely ain't setting you up. I offer it up for free because I used to pay for all those services. What I found at the end of the day was the only thing that you can bank on, good research and yourself, and that experience experience I always talk about, because you have to feel it. You have to own it. And the only way you do that is by getting your experience. But look, start with my free CTP dashboard. It is an awesome way to start your research for your next great covered call stock. Thanks for watching this video. And if you like this video today, I want you to bang that like button. It lets me know you like what I'm doing. And until next time, I hope all your covered calls are profitable.
All I see is signs, all I see is dollar signs.